Good morning, everyone, and thank you very much for joining me for today's morning market review. It is Thursday, it is the 12th of October, and my name is Russell Shaw. I'm a Senior Market Specialist at FXCM, and just want to emphasize my email address or highlight my email address, rshaw@fxcm.com. And of course, if you want to correspond, that's the email address to use. I'm just going to go ahead and bring up our disclaimers. I'm going to start off with the high risk investment warning, and I'll keep this on screen for a few moments. Hey Raj, good morning to you. Nice to see you on the webinar. Thank you for signing in. Thank you everyone for joining this morning. It is much appreciated. I'm bringing up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. And here is our references, MarketScope 2.0 and TradingView. And I think that we have been reading the market relatively well. And I'm referring, if I go through to TradingView, referring to the real rate. We've been looking at the overbought condition, which is now normalizing. This is the daily chart, and it's really pulled back a fair amount of basis points. And take a look even at the weekly chart here. There is some normalization that is starting to take place as well. This is a big weekly candle down. We're down 11%. Now, I just want to be very clear what I'm saying. I'm not saying that the reading is at 11%. The reading is at 2.21%. But down 11% in terms of movement for the week. That's a fair movement in terms of the real rate, and I think we've been really sort of on the forefront of that. And the fact that the real rate is moving, well, we've suggested that's been a key driver of the markets. That's been a key driver of the markets. And what we can do is we can take a look at the dollar just to see how the dollar has moved over here. So let's bring that in a chart. And you can see, let's take the RSI out, and let's just go ahead and put in the arrow here to show here's this week's correction in the real rate. Well, guess what? Here's this week's correction in the US dollar. So we were highlighting that. So I'm very sort of pleased to see that it's playing out as suggested. It gets tricky now. Now the idea is, are we at the top of the yield? Are we top of the yields, or are we having some sort of pullback before a continuation? My feeling is we're pretty near the top. The minutes came out yesterday. They did indicate one more rate hike, but there is some sort of divergence in opinion between the members. We're going to have inflation out today, which is at 2:30 ZA, which is 1:30 UK. Very important data point. So the PPI came out a little hotter than expected yesterday. The market didn't really react to that. CPI comes out today, and I think that's going to be a key data point for us to monitor. Let's just bring up MarketScope and see how the markets have moved. And here is the US dollar. It's pushed from zone 1 all the way into zone 2. We suggested that's relative weakness, and we were looking for that movement down in the greenback. And you can see that we have actually pushed now in terms of the RSI. We've pushed below 50. Let's just take a look at this on a weekly chart, and you can see that yesterday we said there's probably a reference candle that's coming in here, and well, we've got another 2 days of trade. We'll just have to see how the dollar trades after that CPI announcement. But it does look like it's pulling back somewhat, is moving southwards, and we put in the resistance area. Look, it kind of hit the resistance spot on and then turned down. And again, pleasing to see, because it doesn't happen all the time. You know, the market's very challenging. So when things go your way, you know, that's something that I guess give yourself a small pat on the back without getting too excited about it. Let's just take a look at another one that I think was interesting, the DAX. I'm just going to bring up the DAX, and we saw the DAX yesterday really setting up for this move, and we put in the support area, okay, and you can see that it also moved nicely in our direction. So again, I like it when that happens. Clearly, every trader celebrates when their analysis pays off, and just to see that we had that risk-on movement. And what was the thesis? What was the thesis around the real interest rate? That's what we've been focusing on, that real interest rates come down. As that real interest rates come down, so the risk-on movement has unfolded, with equities lifting up and the dollar pulling back. Again, I want to reiterate the CPI announcement, and then tomorrow we're going to get the real start of the third quarter earnings, when the banks are going to start releasing, and we want to just try and gauge the forward guidance, because we want all the forces really to be on our side. If we have moderation in real yields and we have good forward guidance, that's a tailwind for the markets. That's really a tailwind for the market. So I think, entering an important time, and if we can just get the results come through, I think that there's a fragility in the results. Are they going to be as good as Wall Street is forecasting? Really, there has been some news. Say Rivian came out with some sort of guidance in what we can expect, and it was a bit poorer than expected. So the idea here is we want to try and match up the stock market fundamentals and earnings with the macroeconomic fundamentals, and hopefully we can get the two forces acting with each other, pushing the markets in our direction. Okay, let's take a look and see if there are any potential signals or potential signals that are generating for today. And we'll just follow our usual order. So we'll start off with the Euro-US dollar. Let's just take a look and see if there is opportunity here. Again, I want to reiterate, CPI inflation, 2:30 p.m. ZA, 1:30 p.m. UK, very, very important. I think it's going to be a reading that can influence market direction. Okay, so let's just take a look at what's happening with Euro-US dollar. Let's just go through to the daily chart first, and you can see there are several things happening on this chart that we want to highlight. So the first is that we have popped 50. Okay, we've popped above 50. So we've got the momentum that seems to be going in our direction, and that seems to be off the back of the fundamental backdrop that we've built up. Take a look at the movement from zone 3, which is bearish, into zone 2, which is neutral. We're on the cusp of going into zone 1, which is bullish, right? So there seems to be a nice leg up here, no overbought condition. If we see some sort of moderation in inflation today, that could be a catalyst for further Euro-US dollar gains. And if we take a look at the hourly chart, yeah, Well, what I like is that the stochastic, let's just take the ellipses out, the stochastic has just moved into the upper quintile. And I like that because it suggests that there is a strong momentum in the euro at the moment. We've got angle and separation in the exponential moving averages. We're moving in that northeast direction. Now, as long as we maintain above 80, as long as we maintain in that upper quintile, there is probably going to be an underlying momentum support for the euro US dollar. I want to reiterate, I know I'm starting to sound like a broken record. Inflation release, the CPI release is going to be a key driver here. If it comes in hotter than expected, we're going to run straight into that R1 resistance. It's going to react off of that R1 resistance. So just keep an eye on the inflation reading if it shows moderation. And if the market, excuse me, if the market sees that there is moderation, there could be a tailwind for euro US dollar. Let's take a look at pound US dollar. Just bringing that up, give me a moment. Here we go. Okay. Again, take a look at this daily chart. There is a movement above 50, and we actually have moved into zone 1. So we have moved into the area between the upper red and the upper blue. The next evolution of this chart should be that the bands are tracking upwards. If you take a look at the hourly chart, just got to go and mute for a moment. I just need to clear my throat. I'm begging your pardon. Beg your pardon. Okay. What we can see here with the hourly chart is that it's also moving towards its upper quintile. Again, I think that the cable pairing can benefit from this inflation print, assuming that it shows further moderation. And it's going to be quite tricky. The headline number we would expect to be quite challenging because of higher oil prices. Let's see if that core number shows some sort of give. That would be encouraging if that core number shows some sort of give, because we are seeing oil prices starting to moderate. And that should be reflected in coming numbers, right? Okay, so here, I like the stochastic moving into the 80 area. If it holds in that 80 area, then we can potentially have some sort of underlying momentum, and we continue moving in that northeasterly direction. I just mentioned oil. Let's bring up oil. Let's take a look and see what's happening on the oil side of things now. There was a bounce in oil at the beginning of the week because of the hostilities in the Middle East. Let's just go through to UK oil. We'll take a look at that. Here you can see the big jump up when the market opened on Monday following the terrorist attack on Saturday. If we just go through to the weekly chart, you can see how we said this demand destruction really is probably the overriding candle. It looks like we've kind of read that correctly as well. There has been a fading of the jump on oil on Monday. So what's happening with oil is it gets to a price that actually starts impacting on the demand, and that counteracts the tight supply. And I think that's very much what we're seeing here. We're still in uptrend. But the uptrend is looking quite fragile. You can see we're breaking below that 30-week moving average, and if that 30-week moving average turns down, that would be further weakness in the oil price. However, because there's still a possibility of this expansion of hostilities, another chart to take a look at would be gold. So we just go through to the gold chart, and gold's typically seen as a store of wealth. And interestingly, there is a push up here in gold. So as the dollar price has come down. Gold has benefited and pushed up. Gold's still looking fragile to me because of the lower peak, lower trough, lower peak, lower trough. So it's a chart that we want to carry on monitoring. But again, I think we've been on the front foot here, where we've said that gold looks to be benefiting from that pullback in yields. Again, I want to say where it gets tricky now, okay, is whether the yields are using this as an opportunity to dip in the uptrend, or if we really are at the apex of these yields. And I'm of the opinion we're near the apex, subject to correction. Subject to correction. I don't know for sure, but I feel that we are at levels that are constrictive enough to be restrictive. So let's just keep an eye on that. Typically, one other chart that we can use to analyze yields is the IEF. We have looked at it. IEF is an exchange traded fund specifically looking at bond prices. Why I like looking at the IEF is because we can just see how much value has been injected into the bond market. When I say value, it's been hammered so badly that there must be some value now. Good assets at cheap prices. So if you go through to the IEF, let's just bring that up. And the IEF would move in a counter direction to the yields. So if we bring up IEF, you can see that the IEF has started to bounce as well. IEF are bonds. The conflict in the Middle East pushing a lot of funds into bonds, bonds being havens, gold benefiting as a safe haven as well. So gold being correlated with the movement in the bond prices. Yields coming down. If we take a look at the 10-year underneath us, let's see in the 10-year underneath us. I'm not going to look at the real rate, but we'll just look at the 10-year. Let's just put it underneath. Okay, you can see it's a mirror image. Okay, so as the bond prices move up, so the yields will move down, vice versa. And then what we can do now, very interested in the way the IEF chart unfolds. Basically, it looks like this is panic selling. It looks like this is a panic selling. Now, let's just go through the bear markets again, and I want to show you a little trick of why I think it's panic selling. Let me just see, I think there's a comment here. Okay, there's a few comments. Hold on 1 second. Okay, Raj, perfect. Perfect. Kim's asking a good question. Do we wait before we trade the? Do we wait for the CPI announcement for the pairs? Prudence, Kim, suggests you should. Okay, I don't want to say this is advice. I'm just saying prudence. If you put on a long trade in terms of euro and it turns out that the inflation is higher than expected, you could be hurt. Okay, so I hope that answers the question. No, not panic buying of bonds, panic selling. I'm not sure what I said there, Gertie. I'm going to show you on a. I'm going to show you now on the. I'm going to show you on the paint. But I mean, if I said panic buying, I meant panic selling. I'm begging your pardon. All right, let me just bring up Microsoft Paint, and then I want to show you just a little trick. Okay, so Dow theory says there's three phases to a bull market. It also says there's 3 phases to a bear market. Okay, and we're just going to look at the bear market. Bear market, we have abandonment of hope. Abandonment of hope. Okay, and then we have a worse earnings as the second phase. And then this is what I was referring to here, Gurdeep, panic selling. And typically after the panic selling, which is a terrible stage because it's really just a complete bloodbath, then we generally go into the first phase of the bull market, which is renewed confidence. Renewed confidence. Okay, so take a look at the IEF. And what I want to do here, guys, is I want to add in volume. It's something we don't usually look at, but I think it's worth just adding in the volume histograms here. So just go through to indicators, go through to volume. Okay, and if you take a look last week, look at the increase in volume there as it just gets sold out. It looks like a selling climax. And I think that's kind of telling, getting the selling climax over here, that's kind of telling that I think we're pretty clear to the nadir of the bond route. And if we are, then we pretty much at the apex of yields. The question is, how do we go from here? V reversal, doubtful. A push to the sides in a consolidation accumulation pattern, probable. Matei saying, in other words, it's still not a risk on market yet. Well, the yields have started correcting, Matei. The stock market is starting to bounce. What we did look at yesterday was the Nasdaq. I think it was yesterday, where you can take a look at Nasdaq just as a proxy for risk on. If you go through to Nasdaq 100. Just bear with me while the Nasdaq 100 comes up. Yeah. What we can do is we can take a look at, is it this chart? This chart. Okay. In other words, look how we've drawn in the descending triangle. It's almost breaking out here, Matthijs. In other words, if we break out, that's risk on. Okay, that's risk on. Okay, but we're still in the descending triangle. It is kind of, you're quite right, it's fragile at the moment. Let's see how the inflation story plays out. If it moderates, that's a tick in the right direction, a check in the right direction. Okay, that's a check in the right direction. James is asking to see paint again. Sure, we can do that. So we've got renewed confidence. I'll just put in the bull phases as well, just for your records, James. So then we've got improved earnings as the second stage of the bull. And then we've got here as the last stage of the bull, a stage called rampant speculation. So this is the way the market, let me just correct the spelling, speculation. This is the way the market tends to unfold according to Dow theory. Okay. Renewed confidence, improved earnings, rampant speculation, abandonment of hope, worse earnings, panic selling. All right. I think that's as far as we'll go this morning. Are there any other questions? Any other questions? Please go ahead and type those in. All right. All right. Let's wrap up here, guys. Thanks very much. Have a great day ahead. Great evening. We shall chat tomorrow morning. All the best.